Mr. Chambers for 5 minutes.
Thank you very much, Mr. Chair. Thank you to our witnesses for being here. This is an important study for our committee. There's been 85% inflation in the housing market since 2015. And as my colleague mentioned, Bloomberg ranks Canada as the second most inflated housing bubble in the world. It now takes up about 2/3 of a family's gross income. So my first question would be to Mr. Rutledge. Have you raised concerns or warnings to the Department of Finance, and in particular the Minister, about vulnerabilities to the financial system from an overheated housing market?
Mr. Chair, my advice or consultations to the Minister are and should be confidential. With respect to the risk to the housing system, housing finance system, and then the broader economy from very high house prices, we're very alert to it, and that explains our actions over the last couple years, and indeed going back beyond a decade, to add those safety buffers I talked to help absorb any volatility that might come after that run-up in house prices.
Thank you. Has the Minister herself asked for additional briefings or analysis on vulnerabilities, or her office or anyone in the government about vulnerabilities to the financial system from an overheated housing market?
Mr. Chair, my consultations with the Minister will remain confidential, but I understand she will appear before this committee, and that might be a question to ask her.
That's interesting. So can you, if you won't discuss, what might be the analysis, has an overheated housing market been discussed at senior advisory committee meetings?
Those committee meetings are confidential and chaired by the Deputy Minister of Finance. I'm going to keep my counsel with respect to that as well, Mr.
Okay,
Chair.
well, we may look for additional information later. This committee may ask for. Mr. Rutledge, continuing with Mr. Rutledge, Mr. Chair, in an interview with BNN, when referencing speculators, you were quoted as saying, kind of, all the power to them. This is a free market. Isn't part of the problem in the housing market that we have this speculation, and the speculation actually increases risk to the overall financial system?
So, Mr. Chair, factually, I did say words to that effect, and factually, investors as a percentage of home buyers are higher than they've been traditionally. We have a free market, we have a free country, and we have a housing system where Canadians, if they choose to invest in a second or third home, can do so if their banks will underwrite. And that comment specifically related to that reality in the context of OSFI has to make sure, knowing that happens, and knowing that that activity is in greater percentage, we have to make sure our housing finance system can absorb the volatility that might follow that activity.
Thank you. In that same interview, Mr. Rutledge, you mentioned that if we don't build supply, that you would be very concerned about increases in financial system vulnerability. We just heard testimony from Ms. Bowers that we are unable to meet our supply goals over the short and the long term. Are you concerned?
Mr. Chair, at a speech in Vancouver, I did and continue to hold the view, I did state the view and continue to hold the view that a supply-demand mismatch is a prudential issue, in that it'll tend to produce higher housing prices, and housing prices are already quite high relative to income. So the important thing for a superintendent to do is to acknowledge that and begin to redouble efforts to ensure whatever might come of that, the system can manage and continue to provide vital services to Canadians.
Thank you. Switching to CMHC, thank you, Ms. Bowers. You mentioned your primary concerns over supply, and that's really affecting price inflation because of this mismatch between supply and demand. We talked about a bunch of supply issues. Have you raised kind of concerns about the effectiveness or the counterproductivity of demand-side proposals from the government, including, the new TIFSA account for home buyers, doubling the home buyers tax credit? These are proposals that are going to, juice up the market on the demand side. Are you concerned about these?
Short answer, please.
Thank you very much. In a supply-constrained market, you have to be very careful about measures that impact demand. So, if CMHC is asked to provide policy advice, we would take that into consideration in providing our advice.
Then I have Mr. Chambers.
Thank you, Mr. Chair. First question, Ms. Bowers. If you look at market share, CMHC market share data seem to have been declining for a number of years. And then recently, it looks like CMHC has regained some market share. Is this a strategic and deliberate shift on behalf of CMHC to grow its market share?
So mortgage insurance, the mortgage insurance business is a very important part of our business. During the last financial crisis, CMHC's market share grew very substantially. At one point, because there was sort of the withdrawal of private insurers, CMHC was underwriting about 90% of, we had about 90% market share of the insured space. Since the last financial crisis, we've been deliberately decreasing our market share because we feel that it's good to have competition from our private sector competitors in the mortgage insurance space. Having said that, we're very aware of the importance that mortgage insurance plays in financial stability. So we have a target that's approved by our board to strive for about 40 to 50% of the market. We're a little bit below that right now, and we're working hard to achieve more market share. But again, we have to compete with the private sector players, and we have to up our game in terms of providing better service to our clients. However, even though we have a lower market share than we like, I'm not concerned about that because we have the expertise and capabilities in-house to scale up our business if needed. So from the perspective of providing acting on our financial stability mandate, we feel that CMHC has the capabilities to support government and the needs of the day.
Thank you, Ms. Bowers. So, increasing market share will inevitably increase our, risk to taxpayers if we crowd out the private sector. But just switching gears here, in 2017-18, there were some new proposals by Natural Resources Canada to look at improvements, what they called improvements to the building code. Many industry players, voiced some concerns about building code changes that would actually increase the cost to build new homes and construction. Of course, we're talking about inflation to housing, and the cost to build a home is important. Was CMHC consulted, or have you done any work with Natural Resources on those proposals?
So I am not familiar with those specific proposals. It sort of predates my role as CEO. I can certainly get back to you and to determine CMHC's involvement, but generally building codes is not within our area of responsibility, but we may have been consulted, but I had to check.
Thank you very much. Mr. Rutledge, do you have any data that you could share about how the stress test is applied regionally? StatsCan typically only reports national debt service ratios and not by region. So I'm wondering if that's something that OSFI looks at, and could you provide that to the committee?
Mr. Chair, the stress test, we apply the stress test uniformly across institutions, and that would lead to a uniform application across Canadian regions. With respect to debt service ratios by region or province, and I'm making an assumption that's what they ask for, I will look into that. I don't have that off the top of my head. But you may assume that in high-priced cities, debt service ratios tend to be higher than low-priced cities.
Thank you very much, Mr. Rutledge. In 2015-16, OSFI had as a strategic imperative for the organization to get a handle or to learn more about the shadow banking sector. The C.D. Howe Institute has recently indicated that sector is now about $1.5 trillion annually. That's about doubling since 2005, I believe. Do you feel like you have, in the last 5 years, have we made good progress on understanding that sector, or do you think that there's still some vulnerabilities there we need to just uncover?
Mr. Chair, by shadow banking sector, might the honourable member clarify what he means?
Non-bank, traditional non-bank lenders.
Thank you. Mr. Chair, the size of residential mortgage credit outstanding is 1.9 trillion currently. About 1.5 is provided by OSFI supervised institutions. The remaining 400 billion comes from non-banks or credit unions. By shadow bank, if the definition is what the Bank of Canada classifies as shadow bank, most of that are mortgages originated by non-bank players and then sold on into our FERFI space. So the banks ultimately hold the risk, but they're originated by non-banks, and that fits the Bank of Canada definition. Within that, there's a small segment that folks might more commonly associate with shadow banking, which is riskier mortgage investment corporations and the like, and that is and remains growing but small.